Good evening and welcome back to Be Rich. Today I want to talk about the state of the world. The world seems to be in a terrible position, and so I want to talk about two discrete things, in fact, three discrete things, which are all signaling that the world's inflation storm is not over and the world's worst economic conditions are not behind it yet. First, let me talk about Target. For those who are not initiated, Target is one of the largest retail stores of America. They're a huge retail chain in America, much like Walmart. Target has said, in spite of declaring lower profits last quarter, they have to come, their guidance is going to be terrible. In fact, they may make losses this year. What is the reason that Target is going to make losses or reduce profits if they are lucky? Is because people's buying behavior has changed dramatically. There's been a huge reversal in people's buying patterns. That's what Target says. People were buying home decor, patio, home furnishings, informal clothing for the last 2 years. Based on what demand was there, Target forecasted and ordered goods from its far flung suppliers across Asia. Because of supply chain issues, by the time these goods have come, the people's mindset has changed. This is because vaccination has improved. People have started moving. So people are looking for more formal clothes than casual clothes, which they were buying for 2 years because there was no workplace and people were formal. The people were splurging the government stimulus checks on home equipment, which people would keep it inside the house. But now Target stores are full for these kind of goods. Suddenly it finds that people do not want these kind of goods anymore. And therefore these goods have to be discounted and sold at whatever price. And they have to be salvaged. So Target says these kinds of goods are going to be available at huge discount and nobody wants to buy them. Consumers' buying patterns have changed from shopping for goods to shopping for services. High inflation has begun to bite, and so people want goods which are already not there, but the same goods of lesser size. So, retailers, primarily Target, Walmart types, have to rework and retool their entire inventory positions. This means lot of orders are going to be cancelled. Unwanted goods are going to be sold at low prices, and the goods and services that people want are going to cost more. This is from Target. The other side, much after cajoling and pressurizing, Saudi Arabia announced after meeting with OPEC Plus that it will bail out the world by increasing oil supply. So all of us are expecting that the price of crude oil will correct. Unfortunately, the price of crude oil has not corrected. Why is that so? Because a finer look at a granular data shows most of the smaller OPEC countries have not even been meeting the previous OPEC quotas for whatever reasons. And therefore, more oil is not going to come into the market as the US thought. In fact, even if Saudi Arabia ramping up supply would mean only replacing the Russian oils that are going out of the market. Countries like India were making a windfall killing, especially the private refiners, by buying crude oil cheap. Now, EU has put enormous pressure on its traders to limit the discount to only $10. So, this is going to put enormous pressure on energy market, and next 10-15 days oil is not going to correct. This means costlier oil, and this means higher inflation. In between, the World Bank has now come out and said overall global growth is going to go down, inflation levels are going to be highly elevated, and the world is heading towards stagflation. This is the first time that the World Bank has indirectly said that the world is going towards stagflation. This means interest rates have to start climbing very fast. As soon as the World Bank said this, Janet Yellen, the former Federal Reserve chief and the current Treasury head of the Biden administration, has come out and said that they miscalculated badly on inflation, something that Larry Summers has been warning them right through, and that the expected inflation is going to be at 4.7 throughout this year. We are in June. So their year starts from January to December. So they expect inflation to average at 4.7. Even this may be very less according to her because inflation may stay elevated. That means there's a possibility that the Fed's interest rate hikes may not bite enough and inflation can be 5.5. That means it has to drop dramatically from now in the next 6 months for it to average 5.5. It looks very difficult. Therefore, what she is indicating is that there will be higher increases in Federal Reserve's interest rates throughout this year. This means more money will go out of the emerging world into America. You can already see that the yen has hit yesterday 132 yen to a dollar, a record, a 2 decade low record. That is, you have to go back to the 90s almost to see 132 yen to a dollar because Japan wants some inflation. So, this consequence is going to mean that more cheaper emerging market currencies, more pressure on currencies like the Indian rupee, and more inflation for us. The RBI has tightened another zero point 0.5 today. Looks like it has a long way to go. A rate of 7.5, according to some people, is given. That means it's now 5.4. Another 2% hike is coming. That means the government yield will cross 8.5 to 9. The overall, the world is going through difficult times. So asset price cannot remain so elevated. There will be a correction in asset prices. Thank you for watching. Be rich. If you like this content, kindly consider sharing with your friends and relatives. Kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we put out a video. Thank you for supporting Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.